Good afternoon, everyone. In today's video, I'd like to talk about two different but very easy ways in which you can identify likely trending markets. Now, we'll talk about the first method first, which is via our Volatility Box models, and that plots in the form of these chart bubbles right here. This is built inside of our Volatility Box tool, where if, using data, we see that a market is likely to be trending, then we'll automatically plot these chart bubbles. Now, in the case of copper, we had a likely trending up notification today, and for all of our Volatility Box members who've been with us for quite some time, you'll notice that copper has been the market that we get this trending up bubble notification on the most. It's also the one that typically tends to trend the most, at least as of recently. Now, to give you an idea of how to play this, once you get the trending up notification, typically I'm looking for a pullback back to at least the beginning of the clouds. And at that point, that gives you an opportunity to start to build your position. And this is just that first scaling position based off of your account size. Now, in the case of copper, we never got that pullback today. So keep in mind that everything we talked about today is just from an observational standpoint. It wasn't a trade in which we had an opportunity to participate. However, previously this week, we have had opportunities here. So hopefully this gives you an idea of how to break this trade down. So once we see this likely trending up, we'd like to see a pullback to the outer edge of the clouds, in this case the green cloud since we're looking for a bullish trend. And after that point, you're looking to see how high is high with copper, really starting to peel off positions at places which make sense. Now, when we say places that make sense, typically that for us means the target lines of the opposite side's volatility box, which if you extrapolate the gray target line, that gives you the first zone. If we continue to break this zone, then we use the next hour's target line, which is, right up here. Right, that's towards the 3.0708 level. And so in today's case, we only hit that first trending zone before really the market then started to turn. Now, what should also stand out here is we never got the pullback. So really, copper just continued to climb higher and higher and higher without really taking any breathers, which you could argue is an unhealthy trend, right? So that's one way to think about it. That's just an observational standpoint. But typically what we notice is once we do get this pullback, meaning a brief pause in this trending notification, then we make our move to the first hour's mark, take another brief pause. Usually you just pull back really to the market pulse line, which is this line right here on our charts, nothing more than a variable moving average. And then from that point, we then continue to make our move up to the next target line, so on and so forth. And so that right there is the first and the easiest way, in my opinion, to try and find trending markets, because all that really means from your standpoint to try and identify this is to just keep going through each and every single chart. Wherever the notification is true, the data conditions are met, you'll automatically see that bubble plotting. Now, the second way is via our cumulative tick indicator. This is the pro version available for free for all members. And so if we take a look now on the SPY, you'll see that this, again, at 7 a.m. Pacific, so this is 30 minutes after the market's been open, if all of the Boolean conditions that we've programmed as part of this likely trending up bubble are true, then we will see this likely trending up notification right here. So now in today's case, we saw that notification on the 1-minute chart, which if we take a look to see what happens after that, we get our pullback to the market pulse line. Again, this pullback gives you an opportunity to enter to start to build up your position. And remember, these positions are built either on the micro futures or the SPY options based off of your account size. The futures full size contract here doesn't seem all that appealing unless you have a really large account where you can afford to keep your stop outside of the volatility box on the scalper models, which in the case, to give you an idea of what that looked like with the S&P, if I shift this up higher and let's contract this a little bit, was outside of that 33.59 zone, right? 33.59.50. So that's quite a steep stop for, I think, most account sizes. 30-point stop on this trending market notification versus playing this with something like the SPY options. Now let's take a look to see what actually ends up happening. Once we get the notification right here at 7 a.m. Pacific, and really, again, this doesn't require you to be any sort of genius with market internals. It just requires you to watch the tutorial to understand how this condition is programmed, where we get the data that's backing up these conditions, and then really just trade this in the same way systematic every single time. Now, we got our pullback to the market pulse. You also got a little bit of heat here, right? I think this was right around 0.18%, so nothing too crazy, but still a little bit of heat. And then from that point, for I think arguably the next, all the way till right around 11 a.m. Pacific, you really just did a whole lot of chopping sideways. So this is right around 10:30, and then after 10:30, we see that the markets actually then continue to give us that trending up bubble that we expected to see. And so this required you to be really, really patient in terms of this trade. However, it did pay off. Now, in terms of how to play this via options, that's where I think you could use SPY out of the money options using the other side's target line in that first hour, assuming we haven't tagged it, as a place in which you're starting to build that first strike, the strike that you're willing to buy, and then sell another strike against it if you did want to turn that into a spread. And of course, keep in mind you are risking 100% of the debit paid. Another caveat or twist on that trade, rather, is to sell a put credit spread that's in the money. And you'll notice here that also ended up working, right? Where this whole lot of chop right here should have helped erode a lot of that options premium, which is another way, yet again, to try and play it. Now, to give you an idea of what the trending move ended up actually being, that was only 0.83% today. So all of this to say, and this is how I'll conclude, I think, this video, it's that even when we've been seeing these trending markets as of recently, we haven't really seen the trend give us that direction that we're looking for, where I would argue this almost feels like a calm before the storm. I know a lot of folks have been sending us emails about the scalper volatility box models looking really wide. Keep in mind that that is done on purpose to try and anticipate the October volatility, along with the election volatility that we're seeing, so that instead of trying to optimize for a lot of trades in which you can overtrade, we're optimizing for win rate, we're optimizing for the net P&L, and we're optimizing to really just continue to increase our account sizes as opposed to get this feeling that, hey, you took a trade and here are the chimes in Thinkorswim. So hopefully this gives you an idea of two very easy ways to try and identify the likely trending markets. We'll also make adjustments to the volatility box if we need this weekend to make the scalper a little bit more aggressive. At least we'll see how the rest of this week pans out. But so far, this looks to be the calm before a storm, where I wouldn't be all that surprised if on Thursday and Friday we saw some fairly volatile markets in which really just this patience from Monday through really Tuesday, a little bit of Wednesday, outside of yesterday's Trump tweet, we'll see that that patience was actually rewarded. All right, take care, everyone. Good luck trading, and we'll see you in the next update.